All right, let me close the door. Welcome to a new case study of the trade I didn't take this morning. I still have some question marks for this trade. There was reason why I didn't take it, but I still have some question marks on the area over here. I'm not quite used to all the concepts I'm using right now, so it might have been a valid trade. Anyway, there's nothing wrong with like waiting for an extra validation. And especially after yesterday's winning trade, it's all right if I don't take another winning trade, right? It might be good for my edge to play out. I'm also gonna, oh, actually, let me write it down. Journal this trade. Journal trade. Yeah. So it's all right. I mean, after all, I'm already up 4.5% this week, so doesn't really matter that much. But would have been nice because the idea was there. We had all the confluences. Um, if I just use the right way, um, actually, now looking at this, but I was waiting for like lower, and I wasn't sure what area to use. However, now looking at it, it would have not mattered. I just wanted this 50-minute area of demand to be tapped in order to take it. So that was my reason why I didn't take it. There was a 50-minute fair value gap. There was a 15-minute demand area over here. As you can see, that swept these lows, swept this low, and tapped into the 50, oh crap, into the 50% of this new weekly open gap. And that was my reason for not taking it and waiting for lower prices. So as I said here, we are below liquidity over here. I want to see price come lower because we have PY and demand areas below. Talking about these. The 1 hour demand is tapped in. So and then there was a 1 hour PY. Let me check that. There was this one. We didn't tap into that. Not a strong one, to be fair, because this one came below. That's why I was waiting for the 15-minute as well. Then we have a 50-minute fair value gap unmitigated, and 1 hour, and basically price tapped into the 1 hour fair value gap. So going about the trade, where are we on the high time frame? Let's talk about bias. Let's talk about candles. We took these highs yesterday, and then we had previous daily high, previous daily low. And as I said over here, we're bullish. Bullish on this structure, not because just the breaks of structure, also because last week we took previous monthly lows, which is a huge liquidity pull. The monthly lows, so like even swing traders have their how do you say that? Their order stops below that monthly low. So those were taken out pretty aggressively as well. And after that, we came up. As you can see, we broke bearish again. That was the take where we took the monthly low, and then we broke bullish again. Added price to previous weekly highs, previous daily highs. So we want to look for shorts. That's where yesterday's trade came from over here. That short. And we discussed all this. And then we tap into actually the 1 hour demand from this time frame. But because I said like I want to into the 50-minute, we had a 50-minute fair value gap that's set below. And we had a 50-minute fair value gap that's set below. Did we actually tap into that? Oh my, I just marked it wrong. All right, that's my bad. So this trade I should have actually taken it because I wanted the price to come at least into the 50-minute fair value gap. All right, so mistakes were made, unfortunate. But Was a valid trade. All right, so we tap into that 50-minute fair value gap actually, not into the demand, but into that 50-minute fair value gap, came into the 1 hour demand. If you look at the 1 hour time frame, so we get the last sell to buy. It was pretty corrective over here, but we came in there, and then we get, if we go to the 5-minute, you can see we're building up liquidity over here. We have our 5-minute early buyers. We get a high, a low, a lower high, lower low, lower high, lower low, lower high, lower low. So we actually take out all these highs, breaking bullish, price continues bearish, builds up more liquidity over here, inducing buyers into the market. Why over there? Well, if you zoom out, it's pretty obvious. We can see we have, so that's over here, right? If you just pull it to the right, you can see over here, this area is where this move came from, and it's also where this move came from. So it's like not over here. Actually, if you pull it all the way to the right, yes, there you go. So we're in an area of support and resistance, and that's why price slowed down there at the key level, and then we smash down. And this is like the interesting thing. I like this so much. Look at the candle formations. If you go to the 50-minute, for instance, after we tap into that 1 hour demand, so this is not liquidity actually, which makes it a bit harder to understand. But essentially, after the push down, we immediately stopped in the form of this doji candle. The push down is like one candle, and that's it. And inside that leg, if you just go to the 1 minute, you can see there's no liquidity. So we get a high, a low, bearish break. So this is our liquidity sweep, so to say. We have early buyers, liquidity sweep, bullish break, and we got 1, 2, 3. So that's the thing I've discussed before. 1 to 3, 3 points that form like highs we can target, and then we have this sell to buy move. So the sell move, we take 50% of that. Now we can see on the 1 minute everything was mitigated. We didn't move away very aggressively either. On the 3 minute, we have this order block. On the 2 minute, nothing too clear, and then on the 5 minute, we have this order block as well over here. The last unmitigated candle, and that's where our entry comes from. So 1 pip above here, and we just enter. And then our first target, well, because I was expecting price to come lower or wanting to see price come lower, I just followed the trade, and we broke above here again. So this is where you do your, oops, don't do this to me, please. All right, here we are again, and I push the same button again, almost make the same mistake. So this is where we reduce the risk as we come above here. We actually close above there, so that's good. Then we take out this like internal range of liquidity, react from this fair value, get price pushes up, takes out the highs over here. And we react from this fair value gap over here. We can see the slowdown again. So I was initially saying, all right, that's good. We get the slowdown now, so we might turn bearish again. We also have this, you can see this actually area of demand or supply. So if you pull that across, can get an entry from there. But I was looking at longs because dollar weakness. There's so much going on with the Silicon Valley Bank that price might come up. We have this bullish structure, low, high, higher, low, high, high, bearish break, bullish break into the new weekly open gap. And because we took the previous monthly lows and we broke bullish on this as well. So actually on this red range, we would like to see price come lower. But we know it's Tuesday. We have this bullish range. We see London forming this swing. We know that London usually sets the tone for the week. So another idea. So London swing, Tuesday tone for the week. So we might see this might be our like from here we might just move up for the week. What also can be is that Tuesday sets the high for the week. This is what we are high. Well, anyway, so coming down, getting down lower one more time. You can see our first target is about here. Why? Because this is like that early buyers that took out this, and we want to target between 1 to 4, 1 to 5 to take our first partials. So our first partial is at TP1, 1 to 4.29. We don't target Asia high, but we follow the range then, and we target previous daily highs, and it just tapped. There you go. We can also see we have some liquidity over here, so there was enough reason to take out the highs or target that high. So this is the breakdown of the trade. Hope it helped. It was clear. Unfortunately, I didn't draw on the 50-minute fair value gap, because if I did that, I would have like changed my mind maybe and take the trade. But I'm still up 4.5%, so who cares? Well, I care because I have to make my edge play out, but it's good. It's all right. All right, peace out.